Are you looking for a simple and easy way to analyze the gold market? Well, you're in the right place because today I'm going to go over my simple trading plan where I'm going to show you my step-by-step analysis for how I mark up my charts, my entries, my exits, my profit targets. So make sure you stay around until the end because this is totally going to simplify your trading. Now let's hop into the charts. So as usual, what I like to do is to start on the weekly time frame and just kind of look at price and see what has happened this past week. So there were a couple of news events that happened this week. Today being Friday, when I'm doing this, there was NFP, so it did send the market up a little bit, and it wasn't enough in order for it to break the previous high from the previous week. As you can see with this candle right here, we did close a really weak bearish candle, but that doesn't necessarily mean that the price will be going down next week. I do anticipate some possible corrections, but based on some of the events that we have coming up for the rest of the month, especially because this is a new month, we could see new highs in the market before the end of the year. So I want to mark up my chart in order to create some zones that are going to help me make better trading decisions. What I'm going to do is take my rectangle tool and I am going to mark off the very top, and that is at 26.88, roughly 85, mainly because at this point, this is the highest point inside of the market. And I just want to be aware of that. So the next thing I'm going to mark off let me go all the way down here. Let me start this way to 24, roughly 86, mainly because we do have a support here. And then from the zone, this is where price really took off. So I definitely want to keep that in mind. And of course, I could mark off some things down here, but price would have to really push through all of this in order for it to come below this level. So just to keep our charts clean, we're going to move on to the daily time frame. So I do want to just look at the zones that I drew on the previous time frame, and I am going to move this box just a little bit so that way the top of my box touches the top of this candle, and I'm going to make this a little bit slimmer because as we go down in time frames, the box and the zones will get bigger, so I just want to make sure that it's easy for me to follow. So I'm going to do that same thing on this one as well, and actually I do like this because I'm just going to make a slight adjustment. We're at 24, roughly 82, but basically we have these wicks here. So I'm going to draw some zones on the daily so that way I can have some zones to trade from when I'm actually looking at the market live. So one of the things I want to mark off is right here at 26.32, mainly because this is somewhat of a key level and I have seen price over the past couple of weeks come into this level. So I do want to mark it off, and especially because we do have a support here and we do have a really strong rejection. And I promise you, I was this close to taking a trade from here today, but I ended up missing the move. I did get the alert, but I didn't get to my computer in time because it was all the way up here by the time I saw it. So anyway, but I do want to mark this off for sure. And then another area I want to mark off is down here at 25.50, and I like that the fact that this is a nice round psychological level. So basically anything that's ending in a 5 or a 0, that is going to be a good area for us to mark off our levels. And then I'm looking at this area right here. We do have a lot of consolidation here, so part of me does want to mark off this, especially because we have a rejection. So all these rejections through this zone, so I am going to mark this zone off. So for right now, I'm going to place it at 25.28, and as we go down to lower time frames, I am going to refine that for sure, but for right now this is looking good. So let's go down to the H4 time frame and clean this up. Alrighty. All right, cool. So this is looking good. This is still looking good. I really like this level right here. And then looking to the left, I do see the fact that we do have a rejection right here, and then we have a resistance right here. Price broke up and then made an all-time high. So right now at this 25.50 level, we do have a rejection and a touch. I do want to actually move this a little bit closer to the bodies of the candles, mainly because we have a nice support here. It's still around that 25.50 level, which is still nice. So as you've probably seen with these price points. They're not actual prices. It's basically you have to think of them as zones. So this is kind of in the zone still. So that is fine to me. Now we see this area that we drew on the last time frame, the daily time frame, and we do see perfect touches all throughout here. So I'm definitely liking that level. May adjust on a lower time frame. And then right here, I just want to move this level down just a little bit to 24. What is this? 24.78, mainly because we have support, and then a rejection. And then we're not going to touch that down here unless something crazy happens and it comes all the way down here. But I don't anticipate that for the upcoming week. All right, so let's go down to H2. Actually, I do want to move that. So I like to just move these around and just see how price looks. Now we're at 26.32, still in the zone, still happy with that. Going over here, okay, so now that we have more information, I'm actually going to move this level down a little bit more, probably closer to, what is this, 25.49, so still in that zone. And then right here, this zone where we have all these rejections right here, this is actually still looking great to me, and this level is looking great. So let's go down to H1. And now let's go all the way to the top. So now that we have more data on the H1 time frame, we do have to compress a bit so that way we can see it all. And basically you're just taking a bird's eye view of what's happening inside of the market. So this is still looking good. This is looking a little choppy, but I think I'd still do like this level. Let's see, 20. So now it's down to 26.30 flat, another nice round psychological level inside of the gold market. And you can see it's tapping into this area perfectly. There is a little bit of gap here, but it's fine because if we look to the left, we do have price action all throughout here. And this is still looking great. And over here, let's squeeze in just a little bit. This is also still looking great. I wonder how it would look if I moved it up just a little bit. Okay, so this is at 25.30. I moved it up mainly because I see this resistance here. We still got all these rejections throughout here, so it's still in the zone, but now it's at a nice round psychological level. And just because we're seeing a lot of psychological levels here in this particular session, it doesn't mean that every time you place a level, it has to be at a psychological level. It's just nice when it matches up. It just helps me in my mind confirm my levels. So right here, 79. So let me see how this would look if I move this down a bit. Ooh, I like this better. So this is at 24, roughly 75. And then if we look to the left, we see rejection, resistance, rejection, and then some rejections and resistance throughout here. And then on the top side, we do have rejections. We do kind of have a fake out right here, but this is still looking good. So now let's go ahead and come up with our game plan for the upcoming week. One of the things that I am interested in for this upcoming week is the potential for a correction or for price to continue to move up. So, and I say correction mainly because if we look at the US news, then there are a lot of bullish catalysts within the market this past week, and that momentum in the US market, so if you're looking at US 30 or something like that, it's probably going to be mostly bullish next week, but you still just never know because things like the event that happened in the Middle East, that could happen, and it could just cause all kinds of things for the markets, and you just never really know. So that's why I like to plan for both sides. I am looking at the fact that there could be a deeper correction coming, but we want to plan for both sides. So pretty much above here, still bullish. Still bullish on gold. And then one of the other things that I see is all of this consolidation within here. So this is a bit messy. So if I was to take a sell, at least for me, the first level I would even consider it would be right here at 26.25. And that's mainly because if we look left, we do see rejection in this area, and we do have a bit of consolidation here. And then another area I want to mark off is right here. And this is at 26.15, and that's mainly because of all the consolidation here. I just want to make sure that I'm playing it safe inside of the market. So pretty much above here, I'd be considering buys for sure. And then essentially below this level, I would be considering sells, but I wouldn't do it in this zone because if we look at how much space this is, there's not enough space. This is basically only 43 pips, and that's nothing. So if we wanted to clean up our charts, we can get rid of that. I would be looking for sells pretty much below this level at 26.15. And if we look at the space between here and here, okay, so that's 150 pips. But basically, I would be looking for sells below here, and then if I'm looking to the left on this H1 time frame, I do see an area that could potentially cause some problems, and that'll be right here at 26.05. But this is a 100 pip range, so if it fits within your trading plan, you can go ahead and do whatever is in alignment with your trading plan. But for me, I'm probably not interested in trading this at all. So actually, I would move my point to about here. But pretty much anything for me here or here, I would be interested in buys because overall the market is bullish. So I want to continue to trade with the trend unless it breaks some major market structure. This here could be considered major market structure. And there's a lot of trouble spots throughout here. Not saying that there are no opportunities throughout this zone, but just based on the way that I trade, it could be a troublesome area, and I just want to be as safe as possible. So that's why I'm looking for things pretty much below this 26.05. And as you can see, this will be approaching 2600, which is a nice round number inside of the market. And then this whole zone right here, if we go from here to, let's just say down here, paying attention to stuff on the side that could possibly trip us up, this is a really big zone, 569 pips, insane move, but you definitely would need a lot of volume. And then of course above here, I would want to take a trade on the opposite side. This is 547 pips. And one of the things to really pay attention to, and this is something that helped me earlier in my trading, was basically looking at these areas where price kind of get hung up. So you could see at 26.67 where price kind of gets hung up, and you could see the rejections here, and then the resistance here, and then a rejection here. If I was looking for a buy, I would chop that and I would make this actually my target right here at around what it says 26.67. And mainly because you have all of this, and multiple times price action just stopped at this point. Multiple times here, and then even if we were to look left, we do see a couple of points all throughout here. So that would be me, and this is still a nice healthy move. This is 383 pips inside of the market. So really, really strong. And then of course, going back to the downside, if price was to continue to go down, then it would be essentially from this point right here. And then of course, going all the way down here. But like I said, we would need some sort of strong bearish catalyst to really push gold way down here. So with that being said, I would mostly be interested in buys. So from here, if for whatever reason price was to fall thousands and thousands of pips, I would be interested in buys at this point. And then basically just whatever the correction move would be inside of the market. So from here to here, 25.30 to 25.46, and then on this side as well, right here, going up. So this was a down move, this is an up move, so basically this is what I would be looking for. But like I said, down throughout here, something crazy would have to happen for price to fall this far in just 1 week. So I would mostly be interested in the buys and looking for opportunities to buy inside of this gold market. So this is my analysis for this week. If you found this helpful, let me know in the comment section, and I'll see you in the next video.